What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 1st of 2019. Well, folks, I hope you are having a fantastic day wherever you are and a great start to your month. And outside of that, for the video, guys, we've got a lot of interesting topics, from taking a look at how cryptocurrency markets can be manipulated to also talking about some pro-cryptocurrency legislation in Germany. We're going to get into the details of all this and much more in just a moment, guys, but I want to let you know real quick that the video is sponsored by Treecoin. Now, for those of you who haven't heard yet, I'm actually going to be an advisor on this project, and I'm going to help them get their message out of what they're trying to do. Treecoin is basically an environmental focused project that's using two of my favorite worlds of conservation and environmentalism to also merging in cryptocurrencies and blockchain technology. And they're basically going about trying to reforest Paraguay, which has had about 85% of its forests deforested. And this actually is kind of close to heart for me, because originally I was actually wanted to create a startup years ago that was about reforestation. So this is really good to see. They're planning to plant over 10 million trees, and the overall goal of the project. So if you guys want to find some more details on it, I'll leave it linked down below in the description. Anyways, guys, we're going to have more details on that as time progresses, as well as I am an advisor on the project. But let's go ahead here today and take a look at the state of the market. So most cryptocurrencies in a no trend scenario. I don't want to spend too much time looking at the market. Not too much has changed, but I do want to toss one chart at you guys. And again, it's getting away from a lot of the technical analysis and looking at the data science models, right? Taking a look at these models that actually give us a good sense of substance as to where we are in the current market cycle, right? We know Bitcoin is a cyclical asset that people look towards when it comes to investing. In that case, you should always look at the cyclical nature of Bitcoin, right? But anyways, to just kind of break down this chart here, right, there's really three aspects to this. This is the 200-week moving average heat map. And stepping away from the formula here, which might overwhelm a little bit of people, basically just to explain it, there's really three elements here. You have the Bitcoin price, which is the gray line here. You have the 200-week moving average, which is this purple line on the chart that's generally going up over time or growing at a slower rate. And then you have a dot here that resembles a percentage monthly increase over the 200-week moving average. So the 200-week moving average is a combination of the close over the last 200 weeks at that given moment of time. So it's taking the last 200 weeks, very similar to some of the indicators we've seen in the past, like the 2-year moving average. It's just another version of that in that case, taking the close of the last 200 weeks. All right, so now we understand that, and we understand as well that this dot is going to change its color according to the percentage of change, basically in this case, month over month, right? It's taking over the last probably like 4 to 5 closes on the weekly. Has it been a 2% increase, a 4%, a 6%? And to put it simple, you can see down here, guys, that the change in color is usually hanging around blue. It's not changing much because down here, there's not a big monthly increase in the price month over month. Whereas over here, we can see here between November and December, it starts getting towards the red category because it's more than 16%. It's up in the 20 to 30% range. It's going exponential. It's parabolic. And long story short, we can see here that both times, actually, if you really want to include back here in 2012, I think it's a little bit of a stretch in that case, to put it lightly. But I would say, just comparing it to the last cycle, we had again this retouch on the accumulation phase. And what I think this chart really it shows in a significant way, especially showing it with the 200-week, is that we were holding down at this range for so long. We had such a short accumulation phase when we actually exited out of that very quickly. And a lot of people, again, have been kind of turned away from this correction we've had in the market. But in reality, we're far away from the 200-week, further than where we were back over here. So again, it's just a little bit of perspective. When you take a look back at history, it makes much more sense. And when you actually can see this, and you can see that for multiple months, right, we didn't have any significant kind of month-over-month gains. It was usually hanging around this 2 to 3 to 4% range in the dark blue range here for multiple months until we really got here into 2017, all right? So it's very important to understand that, guys. Just to let you all know, when I first bought Bitcoin, it was around like the late 2016, early 2017 range, where I was really getting active in cryptocurrencies as a market and starting to build positions, right? When I was investing back here, right, when I was investing back in these markets and building my first initial positions, I wasn't fretting about the day-to-day price, right? I was buying it in hopes, in this case, to ride it out for a much longer term cycle. And you can see here, if you take a look at the time frame, most of it really happens here in this very short window of time. So again, it's best to make sure if you believe that's going to happen, to have your positions in that case, guys. I'm not going to tell you what to do. It's not financial advice, but I already know I've got my positions where I've got them at the moment, and it's in cryptocurrencies, plain and simple. And I haven't been selling, I haven't been trading. I've been averaging in, if anything, guys. And I'll let you guys know when I do make those average ins or if I make my trades, okay? All right, so let's go ahead and talk about the mechanics of market manipulation. Now, for those of you who haven't already seen it, I did a video talking about how markets are manipulated in regards to cryptocurrencies, and we covered like the bulk of ways that markets can be manipulated, from wash trading, which is basically fake volume, and also fake price discovery, to spoofing, to also things that it might be kind of lower, more general knowledge kind of forms of market manipulation, pump and dumps and stuff. Again, I always say to stay clear of all this and to be able to spot the things that we have no control over in this market, where the exchanges or the actors that really control markets can manipulate it in some ways, in some degrees, right? To be able to look out for this so you don't get trapped in their game, right? Well, this is another form of market manipulation that we didn't talk about in that video, but I've talked about for over 2 years now. And I think this is a great real-time example of showcasing that form of manipulation, right? It's something I've really tried to drill, guys, and that is the fact that in this market, the reason why trading is so difficult is because there are these caveats. There's a big issue right now, and that is that more volume and more liquidity is on margin markets rather than spot exchanges, on derivatives platforms versus the everyday exchanges that you're probably used to, like Coinbase or Binance. And there's a very important lesson to take away from that, because if you understand derivatives markets, you understand that basically the price discovery of the contracts that are traded on those derivatives platforms, where the majority of the liquidity is going off of the rate on spot exchanges, right? So the rates on Coinbase, on Bitstamp, on Kraken, the exchanges that we know and trust to some degree. And they may be completely trustworthy, and they may be doing proper business practices, but the problem is that if there is a little bit of liquidity on spot exchanges and a lot on margin trading platforms, people can make big bets on those platforms and then use a small amount of liquidity to drive down price or increase price to liquidate their competition, to liquidate either the shorts or longs on the margin platform, basically the people they're betting against, right? So they can boost their positions, cause short squeezes, and make a large return in the process. Well, this happened in early 2019, in May of 2019, and we're actually going to go and showcase this story. I'll make it very simple and digestible for you guys, just to not to overcomplicate it, because I think that's a big issue in finance and sometimes in a lot of these crypto articles. But Galen Warren, in this case on CoinDesk, did a very good job, not only picking a very relevant case scenario where this was used, but showcasing the incentive structure of it, why they were able to get away with it, and what benefits them for doing this. So. Okay, so we're just going to go ahead here. I'll see if I can get the major points here, right? So he kind of hints towards the fact that there's thin markets in this case. And he used an example on Bitstamp where he realized, or not him himself, but the individuals who are manipulating the market, we still don't know who they are, but a general group of whales had realized that BitMEX, where the vast majority of liquidity is, and where all the big trades are made, is using a variety of exchanges for its index to discover price for Bitcoin, right? In order to trade on its contracts, to find generally the value of those contracts in that case at the given time, right? Well, he noticed, the individuals noticed that on Bitstamp, right? This was on the kind of lower end of liquidity compared to the three players. They could drive down the price on Bitstamp with a few thousand Bitcoin. And by doing so, they could cause a mass sell-off in price. Now, this index that BitMEX used a kind of an average of 3 exchanges, but it was not only enough in this case to drag down the price of Bitstamp to cause a way down on the index for BitMEX, but along with that as well, it also started to sell off in other markets, because there is going to be arbitragers. There's going to be people who copy, because in this case, Bitstamp is seen as a liquid exchange. People are going to start clearing through on those orders on Coinbase, on other exchanges like Gemini and Kraken, right? So it starts to cause a domino effect, right? And because they were able to knock down enough sell orders and basically liquidate enough positions in this case, going clearing through the order book, right? It sparked basically the ability for them to drag down price to a severe degree with less capital than many would expect. And that led the index on BitMEX dropping down and allowed them to make money shorting on Bitcoin, right? To a much higher degree because they can trade on margin. So this is the kind of issue, guys. I'll go ahead and pull up the chart here. I have the hourly here. You can see, as they mentioned here on the chart too, this is like a buy second analysis here of just how many sell orders started pouring in. And they were able to really start dismantling Bitcoin's price here. I'll see if I can get it on the 5 minute. I don't know if it's going to jump me back here. Yes, it did jump me back. Crap. Well, we'll go ahead back here. We'll just go back to the 4-hour chart and take a look here. You can see it on the chart in May. Right, we had a drop here from about 7,800 down to 6,100. Some of you might remember this. I remember it vividly back here because we were on a pretty strong bull market, and maybe people thought this was kind of the pullback we were going to have. But in reality, it came back very quickly. But to those market manipulators, it doesn't really matter if it comes back. The only thing they care about is making sure they close their contract positions and take their profit as low as possible. And this can happen. Now, the good news is, some of you might say, how can you really go against this? If I'm using stops, if I'm being a disciplined trader, I could get caught up in this, right? My stops could get, basically executed, and I sell at a very low position, and the price goes back. Well, the good news is that a lot of these exchanges are now starting to set mechanisms where if the spread on one exchange gets too drastic, then they stop listening to that exchange. And it's gotten to a point where people have become a little more self-aware of it, right? But even taking that into mind, guys, my major point still stands. If you want to avoid this, if you want to avoid liquidation like this, where basically you might get triggered by your stop, or it could be, for example, a very short move to the upside in this case. Well, I would say it's actually kind of nice if you were long in this case and you got a limit order. But if you were shorting the market and it went up and you hit basically a stop limit in this case that closed your short position, right? The key essence here is that trading is going to be like this for a very long time. We are in the wild, wild west days of crypto. That's a great analogy. It's just something to keep in mind. We're at less than 1% of global adoption. And until we have real price discovery and liquidity in crypto markets, we cannot have full confidence that we're going to be trading in a completely sound market. No market is completely sound, by the way. That's an important thing to take into mind, but something that at least is relatively predictable and doesn't have these kind of events. Well, it's going to happen very frequently. It's going to happen for one simple reason, because we not only have a limited amount of liquidity in crypto in general, but the vast majority of that liquidity is on leverage traded platforms, on derivatives platforms where margin is used. And with an illiquid market on the spot exchanges, there's so much incentive to pull the strings and to manipulate markets, right? So anyways, just wanted to talk about that, guys, reiterate that point. I know I've discussed it before. And again, don't doubt that at any of these major swings here, right, that we see here in price, that's not playing a role into it. So anyways, rambling on about that enough, guys. One last news piece for the day. And that is going to be German banks are now allowed to sell cryptocurrencies. Not only sell and custody cryptocurrencies, but basically serve an outlet in this case for people to get access to crypto. So this basically means, in a sense, banks can become crypto exchanges or crypto banks, in a sense, if you want to call it that. And along with that, they're actually able to hold the funds. So they don't need to go to some third party. They don't need to go to some third party exchange to provide cryptocurrency services to their clients. They don't need to get BitGo or some other custodial professional to actually manage funds. They themselves can do it. Now, there's some really good things to this. I'm a big free market guy. Look, I don't really like banks, guys, to be fair. Who would have thought? Nick doesn't like banks. But I want to say this. I think on the surface and on a sense of principle, this is really good news. I think this might be an early sign that a domino effect is in play here, that banks realize, look, do you want this business going to some offshore island like Seychelles or the Cayman Islands or to some other area of the world? Or do you want it to come to your economy? Do you want it to be facilitated under your banks, where you can have some control over the market, where you can play a role, where you can earn revenue, where you can provide a service that people value? Well, I think they're going to choose the latter eventually. I think it's been inevitable for a very long time. The question I have is whether or not these banks are going to be qualified enough to service cryptocurrency services, right? Now, again, if people want to trust them and use them, that's fine. But I think we all know with the vast majority of inexperience for those who are even active in the cryptocurrency space, who run cryptocurrency businesses, and then now trusting a commercial bank that doesn't seem so far. I would say a commercial banking sector, the traditional world of finance doesn't seem to understand cryptocurrencies very well. I really fear that there's going to be an issue that these companies start offering these services in too much of an expedited nature, and they start making some big mishaps. There's going to be mismanagement of custody over funds. Again, going down in that rabbit hole of leaving the honeypot here for hackers. I just know with the kind of issues that banks have had over the last few decades with security, I don't see them doing a very good job here. And I think this is, again, maybe a little bit too late, a little too late, right? I don't know. I'd like to know what you guys think about this. I mean, there's a little bit more details if you guys want to read into it. The article is relatively small here, just generally talking about how banks in this case will actually be able to play a role in the crypto space and won't have to go to external sources. Again, we'll go ahead and read the quote here. German banking associate BDB was positive about the legislation. Credit institutions are experienced in the safekeeping of client assets and in risk management, are committed to investor protection, and have always been controlled by the financial supervision, it said. And such banks could effectively prevent money laundering and terrorist financing. Now, I don't really agree with that. The issue here is that custody of crypto funds is very different than storing cash in a vault and transferring values over a controlled database. It's not that simple. So I just want to make that very clear. I think that this is going to be a challenge for the banking sector. But at the end of the day, I think it's positive news. I think it's very positive because it's going to lead to more competition. If the banks do a really good job, I hope they can apply pressure on crypto exchanges to do an even better job and provide a better service with lower fees. This is what a free market should look like. This is what I look forward to when it comes to cryptocurrencies, having a sense of competition. Anyways, I've rambled on enough, guys. I'd like to know what you all think about this. What do you think about the piece we talked about in regards to market manipulation? What do you think about crypto markets at the moment? I think there's a lot of interesting things going on right now. Again, very quiet right now in the space. I understand it may not be as extremely exciting as a bull market, but I think we're working our way up to there very, very quickly. Anyways, hope you all have a wonderful day wherever you are. Great rest of your Sunday, and I'll see you all in the next one. Stay tuned.